Quick check on the markets for you now. The Dow down 5 points. S&P down 3. NASDAQ down 5. Pretty quiet day, actually. Let's get to some large cap picks for wonderful, widely held Wednesday. Roger Ibbotson, founder, chairman, and CIO of Zebra Capital, and professor at Yale School of Management. Rafael Resendes, portfolio manager of the Toreador Large Cap Fund, co-founder of the Applied Finance Group. Let's take the Eli first. Roger, you're finding good things to invest in, even though the Dow is almost double off its low?
Well, I'm actually pretty optimistic about the stock market. It's true that the stock market has gone up so much since it bottomed out at the end of the financial crisis, but it actually hasn't quite gotten back to where it was before. Most of the gains actually came from the fact that they had cost cutting, and the earnings were up almost. They're also close to where they were before. So although that, as I say, that came from cost cutting and profit margins being perhaps artificially high. On the other hand, going forward, I think we're going to actually see sales increases here, and so we actually see the overall economy expanding and stocks participating in that. So
right.
I'm optimistic.
We just saw a list on the screen of your picks. Lockheed Martin was on it. Got to ask you about that in view of the fact the Pentagon is cutting back. Still like Lockheed Martin?
Well, you got to look for the places that people aren't as interested in. Obviously, yes, the defense industry is not necessarily an area that's going to have great growth. But this is an underappreciated area, like a lot of our picks generally, that there's a lot of earnings. There's still earnings in a company like Lockheed Martin.
Yeah.
On the other hand, there's not much trading volume is relatively low. And so...
Okay, I want to just get Rafael in here. Rafael, you say you got a few different ideas, 2 no-brainers and 1 special situation. What are the no-brainers you'd buy today?
Sure. 2 no-brainers, Medtronic and Cisco. Both are incredibly well-run companies. And I think what's interesting is in the sense of unloved companies, both of these stocks are trading well below their ability to grow into the future. In fact, with Medtronic, you're buying a stock where the market is imputing relatively significant negative sales growth going forward, which just seems silly given the types of products they sell and the demand for healthy lifestyles and quality of living that we're going to see continue to increase in the U.S. and abroad. Cisco.
Okay, go ahead with Cisco. Then I want to get your special situation quickly.
Sure. Cisco, again, if you're going to play the cloud or the mobility wave that we continue to see developing, they obviously are going to be paving the road for everyone to get to those spaces. So again, companies with strong built-in growth that the market basically is paying no growth for.
All right, and Bank of America special situation in 5 seconds. You buy it. How high will it go, you think?
Sure. I think its earnings power can double just by the economy normalizing. So I think you're buying an 8 multiple stock on a normalized basis. I think this stock easily has 20 to 30% upside in terms of a favorable risk-return opportunity.
All right, Roger, Rafael, thanks so much to both of you.